NVIDIA's earnings due out after market close on Wednesday. What is the stock likely to do on that announcement? Well, without knowing the news, we really can't say for certain what's likely to happen. And actually, even if we knew exactly what the earnings were going to be, we couldn't even necessarily predict the market's reaction on that information. What's important when you're looking at earnings is to understand that it doesn't matter if the earnings are good or great or bad. It's all relative to expectations. And I would say that expectations for NVIDIA are very, very high. The stock is one of the darlings of the market. It's been one of the great performers, and I think it's a great company. But that doesn't mean I think it should be bought into this announcement. And at the end of this video, I'll give you my thoughts on where I think the stock is likely to go after the announcement is made post market close on Wednesday. So a few things to think about, and these are things that I've learned from trading the market for 35 years. These things tend to repeat over and over again. I'm going to show you some charts which are also quite predictive in terms of how stocks react into big news. So the first thing I want to say is that earnings, the actual number, isn't really what matters. If you've been around the market for some time, you will know that there's lots of examples where companies have great earnings and their stock goes down. And there's also examples of companies that have kind of bad earnings and their stock goes up. So why can this be? Well, it's really important not to apply common sense when you're trading the market, because it's all about what the information is relative to expectations. Now on NVIDIA, expectations are very high. The company consistently under promises and over delivers. And so the expectation is that the earnings will beat the market's or the street's expectations for earnings. The growth is expected to have to exceed what the market predicts. And that's important because if they simply meet expectations, I think this stock goes down. In fact, even if they beat a little bit, I think the stock might go down because expectations are so high. So as we think about where the stock is going to go, don't for a minute think that it's important that NVIDIA is a good company. We know it's a good company. It's a great company. We know that it has great earnings growth. That's why the stock has made such considerable gains over the last few years. It has priced in really high expectations. Now I'm going to show you a chart in a moment, and I'll show you some problems in that chart which I think are a bit ominous for the stock. Now looking at my list here, as I said, it's not about earnings, it's about expectations relative to earnings. Remember that the stock has moved from $90 just a few weeks ago to $135 within this month of August. And it is now hitting resistance. I'm going to show you the chart on NVIDIA and jump into the Stockscores website here, my website. There's a few things that are important in this chart. First of all, the stock was in a linear upward trend, and then it got steeper and steeper and steeper, and that's called a parabolic trend. Anytime trends go parabolic, they're typically topping out. Now, if you watch my videos, you'll know that I said it was likely to go lower here, and I said it was likely to go lower here. And it did that both times. The market went dramatically lower, hit that $90 range, and then of course has rebounded very nicely. Now, I'm going to jump into a daily chart, and what we're going to see is that there are falling tops on this chart. Falling tops are a sign of pessimism. I want you to think about the market as a war between buyers and sellers. If the buyers are strong, then there's rising bottoms on the chart. The buyers are winning the war. If the sellers are gaining strength, then you start to see falling tops on the chart as they are taking control. If we look at this chart again, think about it this way. Market or the buyers push price up to 140, it falls back. The buyers try to push it up again, but this time they can only get to 135. And the sellers are much stronger to the downside. And then the buyers make their comeback and they push the stock up, but oh wait, it can't get to that 135 level this time. It's topping out at 130 now. And so what happens then is over time, you're seeing a shift in the control of the market. Now, again, I don't want anyone to confuse what I'm saying from the chart with the company. NVIDIA is a great company, and I don't dispute that they have great growth, great earnings, but what is it worth per share? You know, if I have a $100,000 car and I try to sell it for $200,000, I'm not going to have any buyers. You know, maybe at 110, I'll have some buyers who are eager to own that car because they really love it. But it's more effective to try to sell a $100,000 car at $80,000. It's going to sell very quickly. And so it's all about value relative to the product. And here the product is NVIDIA shares. And I would submit that the gains that we have seen over the last, certainly the last year, which has been the most dramatic gains, has priced in really high expectations. All right, so that's my concern with NVIDIA going into earnings here. There's these falling tops on the chart. We've risen up to this level and gotten stuck. If we look at a short-term chart, you can see that we're sort of hanging out here just below 130. We've had a great run. Now think about all of these people that bought this bounce back. Whether you bought it at $100 or $110 or $120, you're sitting with a profitable trade. And if the stock starts to weaken a little bit, you're going to have people wanting to take profit because they were hoping for the stock to go back to 140, beyond 140. And if it starts to roll over, you're going to have this massive exodus in the profit taking. And that will present a buying opportunity. Because I really believe that NVIDIA is a great stock for the long term. I think that it's a stock you buy on dips, you buy on pullbacks and then breaks of those pullbacks. But I would not chase the stock to the upside because I think everyone is so optimistic about it. We're running out of buyers. You know, it's like if you have a whole bunch of people on a boat and everybody shifts over to the buy side of the boat can tip over because there's no one to buy it from you later on. You know, you always need someone to sell the stock to later on. And if everyone that's bullish is already in the stock, then you don't have any new buyers. When the stock fell to $90, $100, there was a whole bunch of new buyers came in, these bargain hunters that wanted to own it cheap. And I think that's the opportunity in NVIDIA. Don't chase the strength, wait for the pullback, wait for weakness, and then look for that opportunity. There will always be pullbacks. This stock has had a great run over the last 2 years, but along the way, it's made some good pullbacks. It just made one earlier in August. You had your opportunity to buy it cheap. Buying it up where it is now, I think is pretty risky. Now, if you own the stock and you love this company for the long term, you're willing to just put it away and park it, then great. I think it's a great company. You might be able to buy a bit more on a pullback. It could certainly run higher on the news. It could have earnings that beat expectations by a wide margin and the stock goes dramatically higher. But I don't think that's what will probably happen. As traders, as investors, we have to trade probability. I think there's a 70% chance we see the stock go lower on the earnings or in the days following earnings, and a 30% chance that it goes higher. And I would rather wait for the pullback and buy the weakness of a good company. Try to buy a good company like NVIDIA when it's on sale. Now, I'm not an investment advisor. Make your own decisions. Always keep that in mind. If you want to learn more about what I do, go to stockscores.com. And as always, subscribe to the channel, hit the like button if you've enjoyed this, and trade well.